Sometimes it can be very easy to get to the numbers and try to crunch every single metric. And through the virtue of doing that, I think you can feel productive and you can feel like you're adding value to the company. But in the end, especially in the early stages, it doesn't matter. For me, what really matters is, and sure, I have a barometer and I track those on a semi-regular basis, but I don't know every metric by heart every single week. What I care about is a few different things. Number one, growth rate. Are we keeping the growth rate up? Number two, what is the ARR and how much cash is actually coming in? How much cash is going out, and then just churn/retention, right? And are we keeping that in check? That's all I care about.
Welcome to Startups Decoded, the show that gets real about what it takes to build a successful startup. I'm Andy Walsh, 2 times exited founder, strategist, and your host. Each week I talk with top founders, investors, and operators to unpack the plays that drive real traction, not just headlines. If you're building something bold, this is where you'll get the honest insights to scale with clarity and confidence. Let's keep growing together. Hit subscribe and share with your community. It would mean the world to me. Hello and welcome back to Startups Decoded. Today we're going into fundraising, the pros, the cons, and sometimes the time tax that can come with investment. And today we've got a great guest in Joseph Lee, who is the CEO and founder of Superdemo. Welcome to the show, man.
Thanks for having me, Andy. Appreciate it.
Today, I'm really excited. You're in your second startup, right?
Yes, second venture-funded startup.
Yeah. So your experience there, I'm always intrigued because we were talking just before the role of venture capital in a headline for founders feels like it's something that has become a milestone. And we want to unpack that a little bit today as far as if you raise, you get $10 million, you get a headline in TechCrunch, but what does it actually mean from that point onwards is the fascinating part. There's new power dynamics. You've got expectations that you need to deliver. You're giving away equity, so dilution happens. But there's also plenty of upside in the availability of capital to double down on what you're doing. So today we're going to really get into that, and your experience will be beneficial. But to help listeners, I'd love to get a sense of where you started in the startup world and your path, whether it was out of university, but I think for you, it went back even earlier than that.
It did. Yeah. So I'm originally from Seoul, South Korea, and my family immigrated to Canada in Vancouver when I was 7. And growing up in kind of an immigrant household, we had to do a lot to kind of make ends meet. We weren't in an amazing financial spot growing up. So growing up, I'd always kind of obsessed over this idea of like creating something from nothing and finding ways to make money and create a better future for myself. And I think through that endeavor, I just ended up growing up very entrepreneurial. I don't think I necessarily wanted to be an entrepreneur or to be a founder. I think back then it wasn't really even a title. I don't even think Facebook was around, or they're very much in their early innings. But yeah, that kind of led me to a bunch of different paths where when I was 14, I started my first kind of pseudo business, you could say, buying and selling and arbitraging electronics. What that meant was I was going out buying electronic cell phones, tablets, computers in bulk from kind of distressed retailers or stores shutting down, and essentially flipping them in parking lots and on Craigslist when I was 14 or 15. So parents weren't super happy about that. It was a little bit shady, but I ended up paying my way through university with that. From there, ended up jumping around in a variety of different projects. Ended up starting like a organic soy candle business, a t-shirt business, did some web development. And during my last year of school is when I started my first kind of venture-backed company. And what it was at the time was a company called Coastline. And our thesis there, super esoteric, was to democratize the access to smaller scale fishermen and essentially create a marketplace that connected fishers, seafood companies directly to restaurants and bypass the 6, 7 different middlemen and intermediaries in the supply chain. So yeah, and from there it ended up snowballing. We ended up going through a massive kind of pandemic pivot. Eventually pivoted the company to become a business in a box for food wholesalers and distributors, which is still around today, almost 10 years later. So next year is going to be our decade in business, which is cool. And back in 2023 is when I started Superdemo along with my co-founder.
Such a fascinating story. And that if you follow any startup journey, there's very much a pattern that I see. Anyone who's an immigrant, there seems to be this stereotype, particularly coming from the parents, of an expectation is that we're going to do everything that it takes to be able to create a life for you that we didn't have. And that seems to be a narrative that's consistent. And I relate in the sense of not as an immigrant, but growing up with not much and making do with very little. And I think that that mindset can be really helpful in the sense of a startup. And I think the other side of it, though, that I love is that you're looking for ideas in places that people may not be as well. Like you see the world through a different lens. So you're going, well, here's something that I see, like someone that's got distressed stock that they're selling it for cheap to move it, so they're not sitting on it. You can make probably a little bit more, but it's just smart. And like even the coastline piece, like the understanding within trade, and I think it's really fascinating for the world we live in today. Those kind of businesses that have functioned the same way for decades, sometimes 100 plus years,
Yeah.
that AI and the role of AI in driving effectiveness and scale is going to redefine some of these everyday categories too.
I think these niche, kind of esoteric, traditional industries, like you mentioned, haven't changed in decades, if not centuries. And now is like the perfect time to kind of upend some of the traditional processes. And I think there's more of a willingness and appetite for a lot of these incumbents to change with the proliferation of AI. And the best of all, I think the more niche you get in some of these industries, the more defensible it is. Like people can't really copy you, right?
And I would see it as, say, you had a plumbing business. It's only so much you can grow, but if you're able to create a way to drive what you're doing at scale and get more resources by using agents or having tools that allow you to have a multiplier effect. I love that opportunity. And I think that's going to be fascinating, particularly in the secondary market as well. I think will be really large.
Yeah.
We're not here to talk about that today. What we're focused on is around fundraising and your experience there with venture backed companies. And we set up at the start that quite often people are looking for headlines. And sure, it can be great. It can be a line in the sand or a moment that helps define you and gets exposure to new people. But there's a lot of flow on effects. And just give some context as far as your first fundraising experience. Can you talk us through at what stage your company was at the first time that you did it and what you were looking for and where that landed?
Yeah, so when we first raised, so we were lucky to have, and we were fortunate enough to have gone through a couple accelerators. The Next 36, kind of an incubator out of Canada, Techstars. We were part of the Seattle cohort back in 2020, 27 back in the day. But yeah, frankly, when we actually went out and tried to raise capital, it was difficult. It was a very different time. It was not the ZERP era. It was not the AI era. I think we had to prove ourselves a lot more. And we were also in a kind of a lower density kind of ecosystem in Vancouver, Seattle, that kind of Pacific Northwest startup community. I don't think being global by nature and remote work had taken off, obviously, back in 2017, 2018. Us being, I think, 21-year-olds, 22-year-olds, the narrative was very different than what it is today. And it was much, much harder to actually get someone to jump on a phone call or a conference call with you versus what it is today.
And the engagement is really important. And we've had a few episodes where we've talked about networking and community and the ability to build your own story with fundraising and being able to have, and it's like I would equate it to marketing. If someone's aware of your brand before they purchase, then there's a higher chance that they'll purchase you down the track. And it's exactly the same with fundraising. They need to understand who you are, your personality, what you've done before, what your product is, and going into the room to pitch changes completely if you've got that connection that's historical.
Oh, 100%. I think, especially in the early innings, say pre-Series A, that's all it is, right? It's a narrative, it's storytelling, it's preaching your brand. And that's where the founder always needs to be selling, right? Whether it's actual sales or their own branding or fundraising, they got to be selling the narrative. Yeah.
And on that, did you close capital on that company?
Oh, we did. We did.
Yeah. What stage were you at?
So we ended up when we went through the pivot, we were at about a Series A size, and that was the round we were raising before the world stopped. So we ended up raising a 2.5, $2.4 million seed, and that was back in 2020. 2019 when we raised that round.
It would probably be unfair to try and look at how you use that capital during a time where the world got turned upside down, and particularly in a business where you're dealing with a lot of people working with other people. That obviously changed significantly. But were there any things that happened through there in a more traditional sense that opened your eyes to that dynamic that changes within your business once you have someone sitting at the table who's put their capital into your business?
I think the entire narrative of how you build the company, the type of goals that you're chasing, how you operationally like build the company, I think those all kind of change, right? And I think we talked about this a little bit earlier. The more and more you end up raising, I think you end up being forced or pushed into a position where you're no longer going for a single base hits. You're at a point where for you to kind of clear the preference stack and return money to investors, and for you to be frankly fair to the investors buying into the company as well, you need to be swinging for at least a triple, if not a home run. And that can be a pretty tough proposition because a lot of success in startups, it doesn't come overnight and it takes time. But the reality is venture funds have limited time periods where they need to return capital to their LPs, and you need to somewhat abide by that. I think nowadays, I think some of that narrative has shifted, and founders can raise in a way where they can have a little bit more optionality. And that's what I really preach. And that's probably one of the mistakes that I made in the previous company, is maybe over indexing on fundraising and buying into, like you mentioned, the tech crunch headlines and the narrative and the good feeling that comes from raising a round and having everyone on LinkedIn and your community celebrate you. And I think we, as young founders, were naive and kind of bought into that instead of having a very clear like use of funds, understanding dilution economics, knowing exactly how much we needed to raise to get to profitability or to our milestone, which is something that I've like obviously taken with me, the lessons, and applied to what I'm doing today.
Great insight. And it's so easy to get caught up in that dopamine hit of the hunt, the closing, that bank balance jack up instantly with a check. Like, it feels pretty good, but it comes with a lot of expectations. There's a term, investment tax, as far as what you then need to do. And if you think about the power dynamics around that, you've got a VC that you're working with quite often at that seed stage, plus they're getting a board seat. So you have to be able to manage conversations, but then they're also dealing with LPs, right? And the team that they have within their fund. So there's a balance that they're doing too. So they're having to invest, make sure that they drive returns at a multiplier that they set as an expectation or guide to their LPs. So they're also beholden to a group of people. And it feels like that multiplier effect and the expectations, the multiplier is getting higher and the turnaround time is getting shorter to hit that multiplier. So that flows on to every founder that's part of that fund.
Yeah, totally. And I don't want to like classify every investor as someone that's pushing you and, pushing some sort of narrative as to like speed up or get to some finite result within a set period of time. I think if you're able to choose wisely and find supportive investors, they do exist. You can kind of have a best of both worlds, I think, of having capital, having optionality, and having a little bit of a safety net so that you don't have to worry about finances and run, while still having a little bit more flexibility on the timeline and return side of things.
100%.
Yeah.
And I'm definitely not going to throw the negative brush at VCs. It's more around understanding all the moving parts and components. If you're doing VC investment for the first time, there are a lot of things that you should go in eyes wide open, researching. And right now, there's no excuse at all for not being well read. There's so much information, a lot of transparency people are putting out there. And we met on LinkedIn, where I meet most folks that I haven't met in person, and just seeing what you talk about and other people's stories, like I get a sense as far as what someone's prepared to explore and understand. And I'm just one person, but VCs see the same thing as well. And they're seeing what you're doing. And I've had some really good VCs on the podcast so far. I had Jeff Becker from Antler, who is amazing in the way that they incubate and nurture the companies within their portfolio. They give you every chance of success. I had Jason Schumann, who's GP at Primary Ventures here in New York City, and they have a team of 35 plus people to help drive impact. And they're putting their hand in their pocket to invest to help you grow as well. So those experiences are great. So would you I don't know if there's a really simple framework, but are there some things that you would suggest that if you're a founder looking for VC investment for the first time, any kind of things that you would look for outside of capital within a VC partner?
Yeah, yeah. So this is specifically what you're looking for when choosing investors, not like maximizing your chances of getting investment. Is that right?
Yeah, I'd say, yeah, if you're in a position where you can choose and you're
Right.
having that back and forth to set up terms that feel like they're mutually beneficial, like what sort of things would you put on the table?
Yeah. Well, number one, I think it's character. I've dealt with a lot of it's a people business, right? You're building a relationship with them for the long term. And ideally, they bring something to the table beyond just their money, right? Money is cheap nowadays. You can find money in many, many different places in many different forms. So you really need to think about what else are they bringing to the table beyond just cash? Are they bringing a network? Are they helping you hire really good talent? Like you mentioned, are they going to roll up their sleeves and actually do the work? And that's one of the things that I look for. Are you going to introduce me to customers? Are you going to introduce me to partners that I personally can't access, but you can because of maybe your network or companies that you've invested in, and do that grunt work to make that introduction and push on that front? I think those are all things that I look for. But character, I think character can't be taught. Skill sets can be taught, and relationships can be forged over time. But you'd be surprised at how many investors you run into are simply just arrogant. They kind of look down at you, or they act in a way where they think they're kind of God's gift to earth, and you're like, "Hey, man, it's like we're having a conversation here, and like let's just be humans." But you'd be surprised at how stuck up some investors are, and for me as a founder, that's like an immediate no. And I've run into that so many times. And I've had like many discussions with like really amazing VCs about this topic. And frankly, they're embarrassed by it. They're like, yeah, like that puts a strain and like a negative taste in people's mouths when they look at VC. And not all of us are like that. And you'd be surprised how many times founders will choose VCs based on like just this very simple premise of like, this is a high integrity, high character, humble person that I can actually talk to and have a beer with, rather than someone that I'm like constantly trying to impress, or I feel like there's like a power gap here.
And you just can't have that every day. If someone is acting that way in the first conversation with you, or maybe there's follow-up conversations and that pattern is consistent, it's like getting a new co-founder. You wouldn't be flippant on a co-founder, right? You have to spend every minute of every day with your co-founder. And the VC ultimately becomes the same because they've got expectations, and that's okay. They're putting money into your business. But if they're bringing it with a bunch of attitude and negativity and pressure that's completely unrealistic, then it creates a burden for you as well. So you need to be aware of that cultural dynamic, just like a VC would look at you and go, is Joseph someone that I want to have in my stable with our fund? Is he the right personality type? Does he have the right cultural fit, etc.? They're doing the same thing, and it's a mutual piece. It's like a marriage. I had Chris
Yeah.
Tottenham from Notion Capital the other day, and he was talking about that dynamic. It is like having a marriage, but in this marriage, the stakes seem to be higher and more intense because you're focused on one thing and one thing alone. And if it doesn't work out, then it gets strained very quickly.
Yeah, totally.
So to fast forward to what you're now doing, I'd love to get a little bit of an understanding around Superdemo. Can you talk us through your latest project and where you're at with that?
Yeah, so the company that I'm building, as you mentioned, is called Superdemo, and we help software companies create kind of AI-powered, clickable, interactive product demos that they can deploy across onboarding, sales enablement, product marketing growth, training, a variety of different use cases. And yeah, we now work with over 80,000 users, thousands of paying companies across 100 different countries. We have a team of 12 right now, mostly based in the United States and Canada, but distributed across the world, growing quickly. We raised a pre-seed round back in 2023, which is when we incorporated as well as a company. And yeah, we've used that capital to get to profitability. We're at around 2 million in ARR, and it's been a fun ride.
Huge. Well done, man. And I would say too, hearing your history as far as your ability to understand unit economics, understanding market opportunity, validation, it feels like that you natively were doing things very early on in your career that carry through to today. And from an investment standpoint, to bring it back, like you said that you're in a profitable business now. Is there a point in time where you'll raise funds again to escalate and scale what you're already doing?
100%. I think it depends. And I think that's what I've always been like pushing for with the second venture, taking the lessons from the first one is how do we build to a point where we have both founder and business optionality where we're going to grow in a capital efficient, sustainable way. But we want to do that without sacrificing growth. So we're still seeing double digit monthly growth and we have been for the last probably like 20 months or so. So we're keeping the growth rate up and we're keeping the ambition high, but the thesis is that doesn't have to happen at the cost of profitability or reducing your options where runway is dwindling and you're forced to maybe raise another round. So we want to raise a round if it makes sense. And I prefaced this earlier, if the right partner is there who's going to bring value beyond just capital, maybe network, maybe hiring, maybe getting us customers or helping us grow to become kind of an international brand. That's when we can kind of go through the calculus and see does that make sense for us. But as long as the growth rate is high and we're ambitious and the team is executing and we're building a world-class product, we're also happy just going down the path and continuing to get to profitability, printing more money, thinking customer first. So yeah, we're lucky in the sense that right now as it stands, we have optionality. Who knows what'll happen in the age of AI? We could all be extinct tomorrow with Claude Code and Codex from OpenAI, but we'll see. For now, I think we're definitely in a pretty good spot.
And I think that pragmatism is a theme that I'm seeing a lot in 2025 is the ability to understand your business model, understand cash flow, understand all the things that allow you to have a higher level of confidence and really question fundraising. And I'd love to hear you talk there as far as capital can help you grow, but you're also looking for more than just capital. And when you have a business, it's proved that it's got strong validation, strong growth. I'm assuming good retention if you're going to double digit growth per month. Then you've got all the hallmarks of a business that is highly fundable and has growth. And in a market, and I think this is a really good place to explore a little bit, the market that we live in today where AI is developing at such a fast rate that you don't know what's around the corner and you don't know who your competitor may even be. It's not 5 years ago, 10 years ago, where you could probably see your competitor coming and there's
Yeah.
ways that you could combat that. Right now, it could come from somewhere completely random, big tech, someone else that has another solution on another platform that's launched that can go to market faster. There's a lot of moving parts in that. So for you right now, do you think that your business could have existed 5 years ago? Because I think what you're doing is fulfilling a need for companies that are doing quick prototypes on platforms. They're getting to market, they're getting early revenue, and they need to demonstrate themselves to a lot of people quickly compared to what they would have done before, where MVPs took a long time to build and were finessed to a point, sometimes too much, to get it perfect. Do you think that that cycle for you is something that you're seeing being really relevant today, but maybe not 5 years ago?
I actually think our product would have been just as impactful 5 years ago, and I think it would have been possible, and it was possible. And I think the thesis here that we solve for is it's a misconception that only salespeople or outwardly facing professionals have this need to create like elegant, professional, high converting product demos. But if you think about it, across the whole cohort of knowledge workers, whether they're like a CSM training and onboarding a customer, whether it's a training manager within a large organization that is like teaching 100 employees how to use Salesforce effectively, whether it's a salesperson, whether it's a marketer, whether it's someone else in partnerships. Everyone has this innate need to demonstrate how products work in one way perform, or how features or products work and the benefits and the functionality of it. But doing so today, it just sucks, right? You're going through like scripting, re-recording, screwing up, clicking the wrong thing, saying the wrong thing, redoing it, and stuff is constantly out of date because your product is changing. So I think that core problem is what we're trying to solve. The one thing I will say is, and that problem existed 5 years ago, it still exists today. So our core kind of thesis and the product that solves it, I think it would be relevant then and today. But what I will say is, with the advent of AI, we've been able to amplify the value, the velocity, and the speed of how people are able to make these super polished, high converting demos, right? So using like synthetic data, being able to re-record content that is automatically out of date, being able to overlay voiceovers, and I think a lot of different kind of generative tools we've been able to layer onto our core value prop in a way where, in one way, yeah, that wouldn't be possible 5 years ago, but the core like experience, I think, definitely would have been possible and was, yeah.
Yeah, it makes sense. And I think the difference then maybe is the businesses that are being built today sometimes are creating a brand new category. So education is really important, and being able to let people know the value you offer, how it functions, etc., is sometimes needed. It's not like you're choosing between Nike, New Balance, and Asics, right? Like it's like they have history and heritage, and it's quite often personal choice. Whereas with what you're doing and a lot of other AI companies that have launched in the last year or two, you're building the market at the same time you're building the product. So
Yeah.
a product like yours makes a lot of sense to aid that journey and help scale what you're doing as well. In a time when you don't have lots of salespeople, you can make that information available pretty readily and let people access it on their own terms.
Yeah, totally. I think on their own terms is a key point there. I think in our TikTok age, people have shorter and shorter attention spans, and buyers are typically coming into like discussions very well educated. They've done their research. They want to get to the point. They often want to get hands-on with the product without like having to jump through hoops or talk to a salesperson who's gonna spend 15 minutes qualifying them and like making them jump through multiple processes. So I think if you're confident in your product and you can explain it the right way interactively with a tool like Superdemo, the earlier in the journey you can share your product and show, don't tell, the better it is, right?
Yeah, and just to use the salesperson as a really easy example there, is you can only have so many salespeople who can do so many calls. So there's a ceiling that exists that's really clear. You can work that out on a weekly basis. How many sales calls can one person do, and what the pipeline looks like. So being able to have that multiplier effect immediately drives that awareness and engagement at a scale that humans couldn't do. I'm an operator and I love getting under the hood of how a business runs. And in the decisions that you're making, you touched on a little bit before. How detailed are your analytics as far as from a financial modeling perspective, unit economics, looking at cash flow, CAC and churn of customers, etc.? Based off what you're saying, my instinct is that you run a pretty tight ship.
Um, yes and no. And it's interesting to me, and I've like written a couple posts and pieces about this because I think sometimes it can be very easy to get into the weeds and into the numbers and try to crunch every single metric. And through the virtue of doing that, I think you can feel productive and you can feel like you're adding value to the company. But in the end, especially in the early stages, I'm not going to apply this across the board. Early stages, it doesn't matter. It doesn't matter. For me, what really matters is, and sure, I like have a barometer and I track those on a semi-regular basis, but like, I don't know every metric of, the revenue metric like by heart, like off memory, right? Every single week. What I care about is a few different things. Number one, growth rate. Are we keeping the growth rate up? Number two, what is the ARR and how much cash is actually coming in, right? How much cash is going out? And then like what is just retention, high level, just churn/retention, right? And are we keeping that in check? That's all I care about. I don't care about knowing free to paid this week versus last week, different cohort curves. There's a lot we can do. Even on the financial side, I do have a very high level model, but so much of early stage building is variable, right? One week can be completely different. You could go through a pivot, you can lose customers, you can gain customers. It's hard to accurately roadmap your finances beyond just a few months or maybe even a year. So I have a model that I try to look, 12 months ahead, nothing longer than that. And I just track, are we bringing in more money, cash, than money is going out? And that I track, obviously, pretty diligently. And you know what? In the early stages, we're so busy. We all have 100 different priorities, 100 different things that we're thinking through. That's all I need to know.
It makes sense as far as the stage that you're at. And I had Crystal Desnoyer on episode 3 pretty early on, and she talked about 3 stages, which really stuck with me. And that first stage of being growth hacking, where you've just got people who are trying everything. They test, they learn, they fail, they go back and do it again. And there's a lot of tough lessons that happen in that first stage. But then once you start to get momentum and you're getting growth and consistent growth, what you just described your business is at that stage, right? You understand enough about your financial model to make sure that more money is coming in than going out. And if that starts to shift, then you can double click and understand why a little bit. But if it's forward momentum and you've got control of those big numbers that you described, it makes sense. But when you get to the scale stage, the next part is when you start to have historical data where you can learn that, say, from a sales and marketing perspective, at this CAC rate, if we spend $100,000, we should drive this return. So you
Yes.
start to see those measures, and each of those 3 stages bring 3 different types of personality types and skill sets. For people that don't mind working in chaos at the start, to the middle
Yeah.
stage, which is getting a bit more structure, to like build, and then third stage are people who can look at data and really sort of escalate what you're doing by understanding those numbers in detail.
Yeah, no, I think you encapsulated it really well there, Andy, and I would agree with that. Like the growth hacking, throwing spaghetti at the wall, and eventually becoming more and more specialized. And I think the reason you can do that when you get to specialization is precisely that. You have like departments, you have functions, you have silos, so you can kind of accurately measure dollar in what I'm going to get dollar out. But one of the biggest issues that, or things that, because we have tried tracking, and it's not like we were allergic to tracking like ROI, but everyone is a generalist. And because we're doing so many things, it's very hard to attribute like a specific experiment as the thing that drove X metric up or Y metric down. So I think that's something that we really struggle with because we're doing so much at one time, right? That all contribute to like the main goal. Yeah.
Yeah, that makes sense. And I hear that a lot. So I think it's having forward momentum, but being aware enough to not get caught out with something that's bubbling away that you don't know it's bubbling away. So it's having that awareness at that level, but not going too far, because it's easy to get busy in understanding data and do it. But if you're not actually using it,
Yeah.
then there's no point reporting it and tracking it and doing all those things. It's like, what do you need to know at a minimum viable level to be able to feel a level of confidence, but not going too far so you spend your whole week in analytics?
Yeah, no, I think you put it really well there in terms of confidence, and that's how we think about it. It's let's measure everything, but experiments should be somewhat like we're not going to get definite observations when it comes to metrics, but it should give us a confidence interval, and the numbers should give us some level of proxy of whether, hey, do we scale this? Do we continue to let it run, or do we cut it? And you don't need to know like the percentage things increase by specifically or know the exact attribution, but you should, even at this stage, you should have a barometer of like how successful was the experiment and be able to decide between the 3 paths that I kind of outlined.
And building on that, from a validation perspective, obviously you've got numbers and reporting in the sense of how your business is growing. But as far as customer feedback, I see a lot of people talking about how do you retain your first customer, and that as a metaphor rather than literal piece. So, like the people that join early How do you build relationships with them? How do you continue that relationship right throughout your whole company life cycle? And then how do you build new relationships with fresh customers in that process? Can you talk us through a little bit about how you think about that customer relationship?
That's very tough, especially for like a high volume product led growth company like ours. We can't have individual one-on-one relationships, even if we want to. Like we do have that with some of our customers, but I think how we try to do it in the best way that we can is number one, just doing things that don't scale and being like fast. What I mean by that is be the fastest team when it comes to supporting users, squashing bugs, responding to like emails or issues that come up. So I think the more velocity you can carry in giving like customer empathy and customer support, I think that is a core differentiator, especially with kind of the response times that they expect from typically a larger organization. Another thing I think is instead of thinking about building like a one-on-one human relationship in the form of like setting up a 15-minute call or checking in with people, I would say work on like perfecting your product, increasing the craftsmanship of your product. I think product velocity and product improvement, showing that you're actively improving it at a high rate on a weekly, bi-weekly, monthly cadence, and putting it all out there. I think that is the easiest way to build customer relationships, customer trust, that you're moving in the right direction and you're addressing a lot of the features and the requests that they have in the pipeline.
Interesting. Do you talk about that quite openly as far as just simple improvements, evolutions, etc., to your customer base?
Yes, yeah. So we have like a set product shipping cadence. So obviously within the company we try to ship like pretty much every day, but we encapsulate the main product updates and we send that out every 2 weeks. So we try to keep ourselves accountable. Hey, regardless of what we've done, we need to be accountable to ourselves and our customers to showing them what we've done in the last 2 weeks. And whatever's live, we're gonna ship, right? We're not gonna delay things because a feature isn't ready. Let's like ship what we have, be accountable so that customers have like an expectation and we're living by that as well.
And behind the scenes, you're a platform that is leveraging AI from your own internal process. Like the tech stack that you use to help scale, there's so many products that you can get now from sales automation to finance. You could spend hundreds, if not thousands of dollars every month on all these things that help. Is there anything that you've found that's helped you be able to grow in a way that doesn't mean hiring 10 more people and things that you've found that helps drive better unit economics?
Pretty much like all the main AI tools that everyone uses. There's workflow automation tools. I'm a big user of Perplexity, for example. We're on the Perplexity Enterprise plan. We try to make our workflow and our processes AI native. So I've and my team has kind of mandated the use of Gen AI across all functions within the organization. Not unlike Shopify and all these other companies have come out and said, because if you want to be an AI native company and build AI products, it's hypocritical for us to not use it within our workflow and learn how to harness it. So on the engineering front, that's using Cursor through our code base. We use Claude Code. We also use OpenAI's Codex. A lot of these tools are evolving and advancing so fast that I wouldn't say it's like there's one tool that we use all the time, because I think they all like kind of inch ahead of one another, and one gets a little bit better, a little bit better. Then one day this one gets a little better, so that we kind of rotate through and get the best possible technology and output from them. Right now, it's like Claude Code that is making significant improvements within our company, where we're able to feed it our code base, feed it context in a private kind of secure way, and be able to like ship new features, new products at a pretty unprecedented rate, where even I am becoming an engineer. And I do have a technical background, but I haven't been like actively doing programming work for the last while. But I'm able to build like a fairly simple feature end to end and draft up a PR that is, say, 80% of the way there, that a full-time engineer from our team can come on board and do the last 20% and just shave like hours and hours and hours off of development time. So it's been pretty revolutionary. It's been pretty crazy.
Fascinating. I could do episodes just on that topic. I'm so curious on that process, and just from simple prompt engineering as a catch-all term to describe some of the things that you can do with no experience to get to a point that's pretty close, and what that means for entrepreneurship today. It's fascinating to look at, but then look a year ahead, and it's looking at the growth that we've had and that multiplier effect. It's not a straight line. It's a curve that keeps getting steeper and steeper with the growth, right?
Yeah, no, that's why I said we could all be extinct in the next couple weeks, right? And my company might not be around. Who knows?
Who knows? I'd love to finish up today with a bit about Superdemo and what people should come to you for.
Totally, yeah. So we work with companies of all sizes, like single indie entrepreneurs all the way to Fortune 100. So we're pretty agnostic when it comes to size and industry. I think where we are the most impactful is organizations that have kind of lateral use cases, not just in sales, but people that have the need to, again, demonstrate products, train people, onboard people, market their products across multiple functions within the organization. That's where we're most impactful. And the type of product I would say is typically more complex, feature-rich products that have a lot of workflows, a lot of features, where if you can provide and harness the power of letting people click through on their own terms in a self-paced way and learn about your features, the benefits, or workflow in a guided kind of visual learning by doing way, you're going to see the most ROI. But the product itself, it's free to start off. Even the premium plans, you can get started on a free trial without a credit card. So we actively encourage everyone to kind of stick around and try it out. And if you love the product, you can upgrade. If not, utilize our free plan and make better product demos.
So good. I'm fascinated, and I'm part of a venture studio, and we're flipping it, focusing on AI native across the board on everything: sales, marketing, build, anything you can think of. So like that automation and testing is really important. So I'm definitely going to give that a trial myself. And if you want to, it's superdemo.com. It's pretty easy to remember. Demo is DEMO, of course. I'll put those details in show notes. But Joseph, thank you so much. It's been really, really insightful to pull the curtain back on your path and what you've been doing.
Thanks for having me, Andy. Yeah, that was fun.
Nice one. Thanks for listening to Startups Decoded. If today's conversation helped you think differently, share it with a founder in your network. And don't forget to subscribe for real-world startup insights every week. We really value your support. If you're interested in partnering with us, email hello@startupsdecoded.com. I'm Andy Walsh. I'll see you next week.